Incredible price action coming out of GME today. A deeper than expected drawdown in the earlier hours of the trade occurred before an almost 100% recovery by day's end. I have ran another historical volatility backtest, but this time on a closer time frame to understand the more immediate potentials. So there are some. Welcome back to the channel on this Microcap Monday. This is ARCa, and let's dive into the microburst. Let's kill them, team. What is up, you guys, and welcome back to the channel. Please do me a favor and hit that like button, subscribe to the channel, do everything necessary to get this thing to live long and survive, right? Let's go ahead and dive in to the charts here. And what we're observing is GME on the 5-minute time frame here. And as you can see, this blue shaded area here is the post hours on the prior day, right? And this is the pre-market for today, and this is today's price action right here, and this is the post hours for today. Okay, so yesterday we determined that we could experience a pullback into this area here. We were ranging between 1436 to 1516 and focused our pullback zone into this area here of 1475 to 1505, which, by the way, intraday, right up, I'm talking about 15 minutes to the market open, we drew down for the second time into this area here and bursted to the top all the way to test the prior day's high of around 1740. In this case, we got a 1741 from yesterday's high of 1745. So please notice here that we absolutely got the targets that we were talking about and nailed a very nice trade here. The only thing, and let's just say, for example, this, right? We were able to knock down an almost 18% trade on the day on that retracement. But I will say that we did experience an even deeper drawdown here to a previous target that we had prior to this, right? These were our bottom supports here that we used in order for us to get to these levels here. So that those targets were labeled between 1356 and 1289 with a focus of 1329 because of the two spot 618 Fibonacci retracement at 1351. We ended up reaching a bottom side of 1362, confluent to that 2618, and then burst to the top yet again, almost returning the entire days from prior's day. All right, so let's go ahead and see what the potentials are for the immediate short term here, right? Let's pull up the moving averages. Okay, very, very good sign here as we are above the EMA 200 on the 5-minute time frame, and we are also above the SMA 200. Take a look at this teal line crossing over that purple SMA 200. This is a golden cross, and this is usually what happens when the SMA 50 teal line crosses the SMA 200 purple line, right? So that's kind of what's happening right there, team. And let's go ahead and now kind of pull out here and see what the potentials are following this this analysis, right? So what I did here is actually I calculated, just like I said in the intro, right? This is a daily time frame backtest of volatility. Anytime that volatility enters the critical zone here of 90%, I have taken a backtest of that upside throughout its entire trading history. So let's just go ahead and kind of zoom out here so that you can see what this madness is, right? All of these iterations here are actually marked by hand by me, right, in order for me to determine how much or what the average move is whenever that condition happens, right? So it just so happens to be that back in the 2021 iteration, we are in a very similar situation to what's happening today in volatility. And that's speaking of just right around this zone here where there was, it went up to what, $400 or $500, $580 or whatever that was. Here, the equivalence of that was around 126 after the dilution, right? So, yeah, I will say that this is the only iteration that I kind of omitted here. And the reason why is because in statistics, you are supposed to kind of omit the outliers, and there is absolutely no other iteration of which there could have been any move of this type of upside. We never got anything, not even above 500% on the daily time frame throughout its entire trading history. So I would have to leave this out of the statistics here. So, but with that said, I can go ahead and show you exactly what happened. Right. Well, what I wanted to mention too, is that yeah, we kind of got a burst of volatility here. And we are in a similar situation and also in a similar point. This line here on stochastic momentum, which determines the bias of direction, right? This is pivoted towards the upside. So, I mean, looking at it like this, right? These are no drawings here. You just have two moving averages, and you have your 80% over bought zone and your 20% over sold zone, right? So this blue line is where we are now, and when the signal fired is right where we presently have it placed, right? So in this case, we are just a couple points away from where we fired during that huge 2,200% run up. Not saying that it's going to happen again. I'm just saying that it's very curious that we would be experiencing a very similar iteration, that of one that we experienced back in 2021 when the asset ran to massive upside targets. So let's go ahead and go over those statistics now and see what we have plotted out for this, right? So I did make a smaller diagram here in order for you to understand what the standard deviation multipliers would be. So I did calculate the standard deviation based off of the average move on this, right? So please notice here that in the this entire backtest here is consistent of 93 iterations throughout the daily time frame. And let's see, 79 of which have been guessed correctly to the upside, giving us an 84.95% upside probability that we can get an average upside thrust or mean of 20.01%. Now, the 20.01% does have a standard deviation of 26.35%. And lucky for us, as you can see right here, I have calculated the upper and lower bounds of the first, second, and third standard deviations to give us upside probabilities as well. All right, so let's go ahead and kind of plot those in line here, because remember, I don't know if you remember yesterday's video, but we definitely went over the probabilities for the 5-day time frame backtest, and that is something that we're going to be able to go over as well. Right over here, this is the 5-day contraction to expansion, and this is the daily break of expansion with an upside test. Okay, so this is what we're going over right now. Please remember that these strategies are absolutely taught by me. Remember to get in touch with me at ArcMastersCourse at gmail.com, as I am kind of condensing my 18-week program down to a 4 to 5 week crash course for the beginners to segue into the strategies mentorship program. That's going to be an 8 to 12 week program following the 4 to 5 week crash course, right? So in this case here, let's just go ahead and make sure that this is large enough for you to view. ArcMastersCourse at gmail.com. Make sure to reach out to me there, and I'll pass you the syllabus and disclaimer and all that good stuff. And yeah, so here are the targets that we're going to go over for the statistical side of the analysis for GME on the daily time frame. Okay, so the first target, of course, we're looking at 20.01. Now, the thing here is to understand or identify where the signal even fired in the first place, right? So we can determine that at the break of 90%, which you can see here in the numbers, you'll see right when I hover over it, you see that left orange number, 65.87. Now, when we kind of notch over here to the next day, see how it says 90.08? That is the break into the critical zone of expansion, right? So 90 percentile is that critical zone. So, and of course, we're right here. In fact, actually, it was down here. So we're even closer than I thought to the iteration where we exploded to the upside back in 2021. Of course, it's not the same situation. We're not under the same economical outlook here. So there is absolutely no reason for us to rally that hard unless it really does happen, right? So I'm just saying. So the math is speaking right now. There is an upside to observe here, and we are in a very, very similar situation or position that we were in prior to the huge 2,000% run up. All right, so when the signal fired is right at this point, so it fired at the open of this day here. So the opening valuation is $11.11. So let's just go ahead and mark off a horizontal line right here so that we can determine where exactly to place our markers here for upside probabilities, right? So the first one being the average upside thrust of 20.01%. Let's just go ahead and draw that in right away, right? Just like this here. We'll put 20.01. I mean, we're gonna get as close as we can as possible, right? But it's all good. That's one target there. The next one is gonna be your standard deviation of 26.35% to the upside. Let's go ahead and jot that down now. 26.35. That's close enough. Now the next target is gonna be the upper bound of your first standard deviation. Now the reason why we're using the upper bound and not the lower bounds is because, if you can see here, we have negative values on the lower bounds. That makes it statistically unusable. Okay, so the range is what it is, right? So let's go ahead and now apply the upper bound of the first, second, and third standard deviation to for it to display our probabilities here. Now remember that these are statistics. They are not certainties. They are just giving us the probabilities here, right? So we cannot take it as such. So 46.62% to the upside is that. Here we go. Nice. That one landed pretty good. And it actually landed right at the close of today at 1631. Really interesting. All right. Now, the 72.97% is the second standard deviation upper bound, right? So let's go ahead and plot that in now and see what that's looking like, right? 72.97% to the upside. Here we go. Let's see. 72 there. Oh, my goodness. You know what? We're going to have to deal with this. The closer proximity one would be the 73.02 to the 72.97. Okay. And the upper bound of the third standard deviation, 99.31% to the upside on that. Okay. So let's go ahead and plot that in here to observe all of our probabilities here. 99.31. That's close enough. 99.35. Okay. So let's go ahead and plot over the targets here just to see what we have in line for the GME asset, right? So let's go ahead and kind of look at this now. First target, of course, right? We had the firing of the signal on this candle here. I just moved over the signal locator, and this actually made the first move on the first day, right? We got a 20.2% or 20.1% to the upside on the average, and you can see here that we actually got on that day. We actually got about a 16% move of that 20%. Now, the following day, we absolutely met the target and surpassed it. In fact, we met on the second day the upper bound of the first standard deviation right over here. So the upper bound of the first standard deviation from the firing of this signal was telling us that we would fire from $11 to $16.31. And we absolutely nailed that. And now we are actually moving to the next one here. So there could be a further upside here. We have two more potential targets on the daily backtest that are leading towards these targets here. So the future ones could be observed right around here. So $19.23 followed by a top end of about $22.11. Okay, according to the statistics on the daily time frame here. So 1923 to 2211. Let's go ahead and just go over the 5-day historical volatility versus momentum backtest just to see what we have on there, right? So these are the targets here, the ones that are not, okay, you know what? Let me just go ahead and get rid of the 5-day time frame ones. Then I'm going to go ahead and put the green labels on the daily ones so that you are able to determine which ones are the dailies versus or distinguish the dailies versus the 5 days, right? So that's how we would know here. Let's go ahead and add those 5-day targets here, right? So here is one. You can see that the 5-day volatility versus momentum backtest also has a very similar target for us to observe of $19.18 here, very close to the upper bound of the second standard deviation at 73.02%. This is a 70.05% that fired at a similar time on the 5-day volatility versus momentum backtest, right? Giving us confluent targets there as well. Also, this target, it was very confluent to our upper bound of the first standard deviation. 39.74% move to the upside from this firing here, right, of the 5-day, similar to this 5-day firing right down here. And that was giving us a target of about $15.71. And the daily was giving us the target of $16.31. So very, very close in proximity to the targets that we had to offer. Now, take a look at this. This is your upper bound of the third standard deviation. And we're getting a second standard deviation upper bound of the 5-day backtest similar to it, 2363. We're going to go ahead and mark it off like this, right? 2363 or 65 to that 2211. This could be an area of resistance for us to look at in combination between the daily and the 5-day back. This would be the daily and the 5-day backtest. Okay, now to further that, the upper bound of the third standard deviation on the 5-day volatility versus momentum backtest, it's taking us to a $27.99, and that is absolutely not something that we have on a daily time frame. This is why we're measuring multiple time frames so that we can get upper targets from different time frames, right? The 5-day time frame is naturally going to take a lot longer for us to get there, but it is giving us a higher probability as well. So now, is this viable for us to kind of observe? Well, let's go ahead and take a look at some of these probabilities here, right? This is the 918. I'm sorry, that thing is just killing me right here with its crooked little smile, right? So yeah, let's go ahead and take a look at Fibonacci's, right? So if I take a Fibonacci ratio from this, from the the beginning of the signal here, we're absolutely rhyming to some of those targets that we have been observing here. This is the 1920 target that is very confluent to both the daily and the 5-day. It is rhyming to the 3-spot 272 Fibonacci ratio at 1931. Very, very nice. That is also giving us the resistance level of the 3-spot 618 at 2071. So now we have a secondary range for us to observe, right? Remember that this can be taught to you in the ArcMastersCourse. So make sure to get in touch with us as soon as possible so that you are enrolled for that course, right? So yeah, these targets are very, very much used, and they're absolutely confluent to some areas of prior resistance and or support, right? 50% zone landing right in between there. Take a look at that 50% right in between here. Resistance at the top end of this area here, guys. Yeah, there's absolutely confluence here with the targets that we're observing. And now, so following these targets, we absolutely have a very nice 4-spot 236. The 4-spot 236 would be taken here at this target of around 2365 in a discretionary manner. So team, I do think that we have some upper bounds to look at here. And now as we take a look at some further targets to the upside, of course, we're looking at this $28 zone. So we can always get a further fib to get us those targets, right? So say, for example, we would match this zone here, right? Retracing from this point here to the bottom. Notice here that we're now meeting the 1-spot 618 at a very, very tight zone. And take a look at this. This is your 2-spot 272 now meeting almost perfectly to the target that we're observing here, statistically speaking, for the upper bound of the third standard deviation on a 5-day backtest. Very, very cool stuff, team. We definitely have some nice probabilities in line here, and I do think that we could experience a continuation to this upside here in the more immediate short term, right? So here in the price action, we are seeing the potentials of a continuation to the downside in the 5-minute time frame, right? So let's go ahead and just expand that. Let's bring this into the 10-minute time frame. 10-minute time frame is already showing us that we could be experiencing a limited downside, which would be bounced from this EMA 20 on the 10-minute time frame 1605. And then we could experience a continuation to the upside. Why? Because the 14-day simple moving average on the RSI is landing in the gravitational zone here, which is usually around 2% from any of the borders, right? So in this case here, as soon as price action starts coming up, there is a probability here of getting pulled from that gravitational zone to the upside, thus succeeding the upside of that SMA 14. I know it's a lot of talk here, team. I understand. And for those of you who are still in the chat, please let me know, or still in the video, right? Please let me know in the chat that you are still there. Thank you so much. I really love you. Go ahead and throw those apes in the chat if you are still here at this point. And please remember, I'll add a link in the description below for you to join the ARCa Bulls trading team. All right, you guys. So yeah, if we do get a pullback here, I do expect it to be very limited. But if we are going to experience a deeper pullback, I got to tell you that the hourly time frame may be displaying something like that. We're getting resistance from the gravitational zone here, which may have us drop into the zone again. Let's just go ahead and observe this area here. We cannot ignore it, right? Again, we're going to notice the potentials of dropping down to this level here, 1505 to the, 1516 to 1436 with a focused area of this zone right in here, 1505 to 1475, just like we did in the earlier part of today. Of course, if we end up failing that, we have the hourly SMA 50 landing right in a familiar zone here too, which is going to be the 1356 to 1289 with a focus on that 1325. All right, team, so that is going to do it here for GME today. If any questions, you know where to reach me, and go ahead and sign up for the ArcMastersCourse here for the live mentorship, right? So thank you guys so much for watching. If any questions, you know where to reach me. Let's go ahead and get this thing completed. Please take whatever I do show and iterate within these videos as just a form of entertainment, as I cannot suggest for you to buy, sell, or hold any assets whatsoever. Never, ever, never, ever, never, never, never. I need you to do your own due diligence, and everything will be cool. But with that said, team, I wish you well. A very, very good rest of your night and or day. And I will catch you at the Bell Mañana. Adios, team.